Welcome back to the channel. My name is Kevin Svenson, and today we're going to be discussing the Bitcoin price action. It's February 20th, Tuesday, and Bitcoin is trading above 52,000. It's great to see that Bitcoin is following the analysis that we've provided here on this channel. Everything from the parabolic trend to the trapped liquidity setup, and even the discussion that we had in the last video about sideways action being the most likely direction before continuation. All of this is playing out. We are getting that sideways action in the shorter term, but Bitcoin is holding above 50,000. Every time the price dips and the bears attempt to get a push down, the support comes in above 50,000. Multiple bounces right on 50,000. That is a very positive sign. Now, zooming out to the daily chart, the parabola that we are in, very constructive price action, breaking above resistance, finding support along previous resistance to create these exponential higher lows. And now Bitcoin is just floating above 50,000. Something to remember is that this market is highly volatile, and that should never surprise you. And what I see right now looking at the daily chart is that even if Bitcoin came all the way back to 47,000, that would be previous resistance as new support. And while the bears would be screaming, this is just another constructive pullback and an exponential higher low. So the bears have a lot of work to do before they can call off this trend, before they can say it's over. There's a lot of work to do here. The bulls are keeping the control in this market, and there would be no surprise if we saw a run towards 55,000 and then a pullback to 47 and then a bounce back up. That's when we actually start to run towards 60,000. I mean, this type of price action is standard in the Bitcoin market. The chart that has allowed me to stick with the trend the best recently is the weekly chart. And what we've been discussing is the trapped liquidity setup. And just to remind you of the aspects of this setup is that when you're in a trending market and you have a major rejection candle, a huge wick where the wick is 45% or more larger than the candle body, wick is much larger than the body at the bottom. At that point, you can make the assumption that there are a lot of short positions in that wick. And if you break above the wick high, it turns into a short squeeze. And in a trending market where the 20 EMA is up at a 45-degree angle, if you break that wick high, that trapped liquidity short squeeze, that target candle, that puts you at a 1 to 1.5 risk reward in a trending market, which lands you above 60,000. But we're just going to place a whole number target of 60,000. So that is what we're still in. And I know a lot of people in crypto have trouble accepting the fact that the weekly chart, the setups that we're talking about in the weekly chart, take weeks to play out. I remember I set this target, and like the day that we broke out, people were complaining about, well, Kev, why didn't we hit 60,000? It takes time. It's the weekly chart, and there's got to be multiple weeks at least that you need to allow before you can expect your target to be reached. And this setup can only be invalid if we break below the candle low or the trend line. So if the price, let's say, comes back to this trend line and we break down, then I would say that the short squeeze setup is probably invalid. But right now it's totally valid, and we are likely going to see continuation of this short squeeze of that candle up towards 60,000. I'm sticking by it. I've been sticking by it, and it's been working. So Bitcoin finding support in the short term above 50,000 is another positive sign. And why is it? Why is the market just staying so bullish right now? Why aren't we getting any rejections? Well, one of the indicators that helps judge momentum is the MACD. Let's take away the signal line and the MACD line and just look at the histograms. The histograms are really the best part of the MACD. I also don't really care about cross-ups and cross-downs. You'll see most people, when they analyze the MACD, they'll be like all focused on the cross-ups and cross-downs. I almost ignore them. What I look for is the momentum shifts on the histograms, which take place at the peaks and troughs of the MACD trends. The optimal long opportunity is when the MACD is shifting from negative momentum to positive momentum. The best short opportunities usually take place when the MACD is going from positive momentum to negative momentum up here. These are the crosses that I really look for. I don't really care about the ones in between. Doesn't really help me very much because usually by that point the momentum is already in play. But the most important thing about the MACD is judging momentum. And you see that Bitcoin generally trends up as long as the MACD histogram is showing positive momentum. These are negative momentum bars. You can see that we are now in another positive momentum trend. And so the MACD on the weekly is suggesting that we should see continuation until we get these lighter negative momentum bars to show up. Well, the trend is up. The MACD is saying momentum is up. We have higher lows. We have higher highs. We have the EMAs pointed up above a 45-degree angle. The momentum is up and the bulls have the control. And anybody that is not in denial should be able to look at the chart and the indicators and see that. And let's take a look at the RSI on the weekly, because the weekly RSI is also been quite interesting because the behavior of the RSI is actually more reminiscent of 2017. And the reason why I say that is because in 2021, the RSI punches above the 70 level and then just kind of comes back down below it. We just had this big mountain peak above 70, and that was sort of the run up. If you look at 2017, check this out. The RSI is above and below 70, above, chopping above and below 70, all the way up this major parabolic trend from $200 all the way to 20,000. Look at that choppy RSI on the weekly, above and below 70. We're chopping above and below 70 again right now. And this is showing me that the behavior, you know, we have a parabolic trend just like 2017, and we have a choppy RSI above and below 70. It's actually more reminiscent of 2017 than it is anything else. So the weekly actually just turned green as I'm recording this video. The daily chart is now up back in the green here. The momentum is still there, and the reason why is because the halving is coming up. Likely we're gonna see continued momentum from the bulls going into the halving. The only place that I think we could see a big dip or a big correction would be after the halving, running up towards our short squeeze target of maybe 60,000. Maybe a little bit of action above that. And then a post-halving dip scenario back to 44,000 is a scenario that I am, you know, at least considering right now to be possible, because it's never up only. You know, I don't want to give off the impression that it's always bullish, it's always up. There can be huge corrections inside of parabolic trends. You always got to be ready for that volatility. There could be a slight sell the news event after the halving. We'll see. I'm not dead set on that idea, but I'm definitely considering it as a possibility. So again, it's not up only. There are always going to be massive corrections, and you got to be ready for those. So into the halving, I'm going to remain bullish, or at least until we hit our 60,000 short squeeze target, and then we'll judge the trend from there. Hope you guys enjoyed this video. Smash the like and subscribe. Be sure to join the Patreon if you guys want to see what altcoins I am getting into. We just added new altcoins. Setting our altcoin price targets have been released as well. I don't really talk about altcoins on YouTube. I just stick to Bitcoin because that's what my audience generally wants. But if you guys want to see what altcoins I'm interested in, definitely join the Patreon. I'll see you guys in the next video.